Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
Hi, good everyone. Welcome to the show. Thanks for tuning in. A pleasure for you to join us as we navigate property and property investment. And information, education is critical in any market, particularly markets that are changing quite rapidly. And there's a whole bunch of people involved in the property ecosystem, the property landscape, the property industry, or what do you want to call it, that all have a vested interest in improving the way in which people that either work within or the vendors selling property or people who are looking to secure property can go about doing it more effectively. We speak about it quite a lot, this ecosystem, and it involves a whole bunch of people involved in property services. Mainly you hear them on the podcast. They're buyers agents, they're mortgage brokers, they're lawyers, they're conveyancers, they're building and pest inspections, they're all and sundry. And you might have heard the later part of 2018, we had a couple of people in from different associations to have a chat about what they do. One of the bigger associations nationwide when it comes to property is the Real Estate Institute of New South Wales, very active, has been for many, many years. And I've asked the CEO, Tim McKibbin, to come into the studio to have a bit of chat to us about what they do, how they do it, why they do it, what relevance they have to you as a property investor, or if you work within real estate, you obviously know who they are, and just really get a bit of a read on the way they see the market, as in they being the association, and some of Tim's visions towards where the association should be moving forward. Tim, how you going? Thanks for joining us.
Pleasure, Phil. Nice to be here.
How long have you been doing what you do? How long have you been in this job as CEO?
I've been at the Institute for 15 years. I joined them as legal counsel.
Okay.
And then 2 years into that, I ended up becoming CEO.
Okay.
So 13 years is that, if my maths is good. 13
years as CEO.
Yeah.
It's a long time.
Yeah. I love the gig. I love the industry. Prior to this, I was in the property industry as a lawyer.
Okay.
But this puts me a lot closer to the coalface. And as I said, I love the industry. I was interested in, when you talk about the ecosystem, I think it's probably the only asset class that I can think of that comes with two things to it. Firstly, everybody has an interest in property. It's a cradle to the grave asset, if you will.
It's shelter.
Yeah,
yep.
You can't.
You need to live somewhere.
Well, that's right. And it's one of life's necessities, shelter, as you rightly point out. And the other thing about property is it's for everybody. And I guess getting a job in property, it's for everybody. So at one extremity, when you talk about those extreme extroverts, the auctioneers, all the way through to the detail people that are in valuation and the like. So if you think about a career, there's a multitude of opportunities for people to be able to get a doorway into the property employment.
Oh, yeah, absolutely. And I guess outside of the fact that it is our biggest asset class, it's where the majority of Australians hold their wealth. It's worth trillions of dollars. It also employs hundreds of thousands of Australians, whether they're tradespeople working on renovations or new builds, through to all the professionals involved in the space, from accountants and lawyers, conveyancers, etc., real estate agents in particular, through to people who have a passion out of design and architecture and stuff. It employs a lot of Australians. So There's no discounting just how important property is to the health of the Australian economy. It is absolutely critical.
Absolutely.
And therefore very contentious.
Yeah, and it underpins the economy. There's no doubt about that. When the property industry suffers some sort of adverse reaction to something, it affects so much broader in the economy. And we started to see that during the GFC, and a lot of people get very nervous. Banks will lend quite heavily against bricks and mortar, but when they see the bricks and mortar starting to cool off a little bit, then they become very nervous.
They do, and the health of our banking system is just as important to the economy, and our banking system is inherently linked to the value of property, and it's the reason why we did so well through GFC, but conversation for another time. Double-barrel question, Tim. What does the REI Real Estate Institute in New South Wales do? And then what's your job within that? How does it work?
So we are a training organisation. We also support our members, our real estate agent members, and there's a variety of facets of practice under our roof. So we support them out in the market with documentation and helplines that they can contact us. And then, as I said, the training, it's a multifaceted area of training. We cover the spectrum in there, both from continuing professional development, so people are able to stay current with the latest legislative and regulatory obligations, all the way through to the education requirements to get into into the profession itself. So to be able to satisfy the requirements for your certificate of registration, which is the entry, and then your license should you decide to go through with that. But most of my role is involved in trying to influence government to understand the needs of the property industry, and in particular what our members require to actually have a sensible regulatory environment that protects consumers' interests. Now, the motto that we have, what is good for the consumer is good for the agent, and that's the beacon we follow. So I strongly believe in that if we want a healthy market, we want one that thrives, and we all do, then we've got to put the consumer at the centre of our attention, and that's what the Institute does.
So essentially, it's all, as well as the training and compliance and standards and equipping real estate agents, you lobby government to make sure that they view property the right way and your constituents, your member base.
That's right.
Yep.
That's right. And I suppose as a CEO, you're supposed to be looking up and over the horizon. So that's becoming more and more challenging. 5-6 years ago, if somebody had said prop tech to me, it would have sounded like a spelling error, and now when we say that, we realise it's the pace of which the technology is coming through and disrupting our traditional models of service delivery, and that is something that, again, I have to be across to understand where it's going, and that is exceptionally challenging because as you look again, if I stay on my analogy, looking out on the horizon, there's about 1,000 roads. And I've got to make a choice on which one I'm going to go down, and I've got to do it very, very quickly. Otherwise, the world moves on. So that is extremely challenging.
So PropTech, and for our listeners that aren't familiar with PropTech, essentially it's technology augmenting, changing, disrupting, enhancing the way that real estate's always been done. So there's a lot of disruption in this space right now. Some really cool stuff coming online. Your vision towards PropTech, your members' relationship with PropTech, are they saying, go away technology, leave us alone because we don't want to lose our jobs, or are they being very ambitious in their view towards PropTech and the associated view towards PropTech about this is an enhancement for the industry moving forward?
Yeah, I suppose two extremities. There are people who don't see it disrupting their industry, and there's current industry suppliers who think that what they're doing now will be what's happening tomorrow. I think a lot of them are going to be in for a rude shock. I tend to think that we need to embrace the technology. I don't think there is any doubt that the technology is here. I don't think it's any doubt that it's going to grow and heavily influence us. So our choice is let it run over the top of us and make us irrelevant, grab hold of it and use it to change and enhance the suite of services that we're currently offering.
So I apologise in advance if you're tuning in. We're obviously going to have quite a New South Wales-centric conversation today because this is your remit. You know, you look after this component. We'll spread it out to other parts of Australia because every state has a sister institute in some form or another, and there's a national body which is representative that walks the halls of Canberra and tries to support the property sector within on a federal basis. Your relationship, as in yourself as CEO and the body itself, relationship with the state government, the sitting state government, is it a cohesive relationship? Is it a fractionless relationship? Is there a lot of friction involved? Imagine there has to be friction because you're trying to shape the agenda. But give us a little bit of an idea inside view into it all.
Unfortunately, it has become quite adversarial, and particularly over the last couple of months. It's certainly not something we go looking for. You don't want to be fighting with people. There's no gains to be there for anybody. Unfortunately, we have a problem where our regulator is driving our government. And the current minister, I've had 10 ministers now. This is my 10th. And the one thing that I think they all shared is that the department runs them. They don't run the department. In one of my most frustrating moments, I said to them, is Yes Minister a comedy or a documentary? Because that was how I felt about it.
How'd that go down?
Yeah, not well.
Yeah.
But nonetheless, that's our biggest problem. So we have fair trading who unfortunately do everything from broken kettles all the way through to our biggest asset, the property. Again, unfortunately, they make decisions for which they have no experience, no knowledge, and they don't know what they don't know. And that doesn't seem to stop them making decisions based on what they reckon is a good idea. So recently, and I don't have to go back too far, there was a position put forward where we'll de-license auctioneers. I mean, all of us know that to be a competent auctioneer, you need to be able to get up on Saturday morning at a reasonable time and have a loud voice. And it took us a lot of work to persuade fair trading to understand that an auctioneer is far more than that, and that it is the making of a contract for a substantial asset. It's not theatre, and that's the bit I think that eluded them. It's not a theatrical performance. You may see it that way, but that's not what it is. And when one goes wrong and you're down at the Supreme Court trying to work it out, why it went wrong and how to sort it out, there's not a lot of theatre down there.
Yeah. So how important are you guys in, there is a lot of industry groups from, strawberry growers through to real estate, through to, people that represent pool services. So in the context of your influence to shape the way in which New South Wales government does stuff, you must have a bit of pull, seeing that you're representing the biggest asset class in the state, and to be said, one of the biggest revenue drivers for them as well, because when property transacts, there's a thing called stamp duty.
Oh yeah.
What sway? Do they open doors for you, or they try and shut them and keep you away?
Yeah, they tend to try and shut us out, which is really surprising and really disappointing, because we're coming at it from an industry perspective. I don't care about broken kettles as they have to, and a variety of other things that they do. They have to assist the industry, the tow truck drivers, the tattoo parlours, the hairdressers, second-hand dealers, and us, and the property industry. So they're spread so thinly across over 40 pieces of legislation. And then one day they wake up and say, well, today's the property day. Yeah. And property is a very, very expensive asset. It is dealt with on low frequency, on high value, and in a very, very complex commercial environment. Now, all of the other stuff that fair trading does is high frequency, low dollar value, low commercial complexity, so that they're poles apart. And sadly, they don't recognise that. So they do and makes decisions on this is a good idea, and don't understand the ramifications of it. And again, there is too much politics in a lot of the decisions that are being made, which at the end of the day just simply harm not only the market but the stakeholders in the market. So I've been long-winded. I would describe us on regularly as being the antidote for stupidity.
Okay. So I don't. This is from my side of things, and Tim, you can go however you want to go on. This is, for me, this is not a beat up of the government. I'm neutral, agnostic. I'm just here to share information. From your position piece, if I was sitting in a board meeting within REINSW and you're going through the critical items of the day and the frustrations that you have, what can government do better, do you think, to better service the property industry? If you had your wish list, what would be at the top, and what would be the next couple of things?
So back to the future is where I would go. So if we go back we're back 1990-ish, back around that time, there was the Real Estate Agent Council. So that was a statutory body, and inside of that statutory body, there was genuine industry participation. And all stakeholders were involved. So we did have a regulatory function within there, which we must have that in there. We also had obviously industry people from the spectrum of that, and we had consumer advocates in there as well. So we had all of these people sitting around the table making a contribution to what the regulatory environment should be and what was best for the market. But now, where they've removed all of that away, they've put a regulator in there that has unfettered control, who does not genuinely consult with industry and makes decisions from a position of no experience and no property knowledge. So it is
that's pretty scathing.
Well, it is, and I stand right by it. But what we need to do is to go back to a genuine consultation phase with industry. You can't properly do your job as a regulator if you don't engage with the stakeholders that you're regulating.
What would your member base, your constituents think, or what would their relationship be, you think, with the New South Wales government? Would you say it was a positive one?
In some respects, yes, but But there is a lot of disappointment, I think, in the way that government has conducted itself over the 8 years or so it's been there now. The disappointment is that when they came in, the conversations we were having with them at that time, they recognised the problems. They really did, and we had a lot of input into where we saw and where they saw the future going as far as trying to rectify and remedy a lot of the issues. But it hasn't happened. So I suppose the cynic in me now says that opposition parties can do just about anything, but government has a lot of problems achieving things, and it has been a disappointment, I'd have to say.
And a potential for a changing government in New South Wales at a point in time. Thoughts towards it? How would that change what you do, the focus of the association? Is it all going to be business as usual? And
yeah, well, I mean, we're an apolitical body, and we defend that. We're proud of it. We support good policy. We like to participate in the development of good policy. We oppose bad policy, and that's our role. So we don't really care which, and we don't care who's in power. Whoever is in power, the power to make decisions that affect our industry, we will always engage with those people. And sometimes that engagement is very difficult. Like I said to you, I would like to see a lot of the politics to be taken out of regulatory considerations rather than be saying, I'm doing this for this particular stakeholder group in the hope that that's going to make you more popular. That's really not how good regulatory work is done.
So a lot of our listeners are probably sitting there going, all right, that sounds really good. It's academic. I don't really give a shit, right? Who cares? I'm a property investor. I'm just looking for the best property possible. And obviously a lot of homeowners as well. So the work that you do, the relationship you have with government and helping to shape the way in which the government approaches policy making, what does all this mean to them?
So your audience, the property investors, clearly the people there, the majority of them, property investors, would be in the residential area.
Yeah.
So to be frank with you, the institute is their best friend. We are out there fighting for the market. Again, the sad part about this is that everybody perceives a landlord to be a super wealthy person that is swimming in cash. The reality of it is that I think it's over 80% of landlords own one property. They are very dependent upon the rent that's coming in to either service a debt or supplement their retirement funds or whatever the case may be. Yet government decides that in this relationship between the landlord and the tenant, that the power is swinging constantly towards the tenant, and the rental income that's coming into the landlord is constantly under attack. And as a consequence of that, investing in this area becomes a consideration rather than years gone past. It was the bricks and mortar. So we are out there defending that constantly. And this is what I said to you earlier about having poor policy. If you decide to discourage investment into residential property, which is where some of the policies and some of the legislation was headed before the Institute got in the way of it, what happens then is people invest elsewhere, and then tenants can't get properties and rents go up. So the very people that you are trying as government, trying to become popular with, are the ones that you harm. You know, you really have to, I think as a government, you've got to step away from and have a very, very light touch to the market. When government gets involved in a market, it should be the last straw, the last opportunity, if you will, to get in. The market should take care of itself, and it does a really good job of doing that. But when a government gets into a market, they normally stuff it up.
My view towards the role of government is to create very smart and sensible policy to facilitate better outcomes for everyone involved in this marketplace. So better commercial terms for transactions to take place, smoother, more repetitive processes to allow transactions to be underway, rules around protection for the consumer and also the landlord. So this is the smart policy you're talking about. It's when, I guess what you're getting at is that when you have policymakers messing with the system too much and putting the wrong policy in place, it can stifle
Yeah.
a lot of the stuff that happens.
And that's exactly what I'm talking about. What you want, and I to pick up on your words there, but you're 100% right. What government needs to do is to put a framework around the market and support the market and let the market do what it wants to do. But once you start to try and influence rents and these sorts of things within a market, you do nothing but cause problems. And we've seen that over and over again.
Yeah. Well, the thing, you got layer upon layer, right? You've got the obviously we're talking a state-based government and how it's creating the framework for real estate to transact. But then you've got to apply sort of federal legislation to it in the way in which prudential regulators like APRA are influencing the way people borrow money. So when you start sort of juxtaposing all these different policymakers at local, state and federal level, it becomes very hard to do business.
Yes.
Very hard to do business. So in terms of doing business, your membership based by and large are real estate agents.
Yep.
That's do you sort of go outside of that? Conveyancers
we have a group of people who are associated with the industry, and they like to engage with us as well, and we welcome them in to for various functions and forums that we offer, so people can interact with some of the other stakeholders, some of the other service providers.
Yeah,
and that's
mainly,
healthy.
Yeah, but mainly it's real estate agents. So what are real estate agents telling you at the moment? Are they happy with the status quo of their ability to conduct business in New South Wales, whether it's representing vendors to sell or buyers agents either on the other side, number one? And what would be some of the criticisms from them about what REI and SW is doing so you can better represent their industry sector?
Yeah, so I think the first issue that they would say is that we're in a position where we spend our day ticking boxes, because the delivery of the services now is so prescribed that it's like a cookie cutter outcome for everybody, rather than having the freedom to be able to deliver a unique service to a particular client. Every person, every property, every transaction is in some way unique, and having the ability to respond to that unique transaction is in my view the best service that you can provide. But unfortunately, because of a lot of the regulatory constraints that's wrapped around us, and I think that would be one of the things that people are very annoyed about, having to spend so much time going through and ticking boxes, as I said, just to be compliant with legislation, with the regulatory environment generally, that does not deliver an outcome for the consumer. It just doesn't do it. So that I think is where they'd be disappointed. As for disappointed with me, I think they'd be saying, "Tim, why haven't you fixed it?" So, and all I can say is, I'm
it's a work in motion,
doing my level best, but you just can't you can't solve some of these problems. I've said that I've given up trying to persuade fair trading to have a different attitude towards what the industry needs. We need support, and we need people to actively work with us for an improvement. And we just can't do it. We've got to get out of fair trading.
If you look at New South Wales right now, and we're recording out of Sydney, so I'm very familiar with what the New South Wales government is doing. There's a lot of money getting spent at the moment around infrastructure, right? Which is cool.
Yeah.
Preparing Sydney, Greater Western Sydney metropolitan area to a future which involves many millions more people, and there's rail infrastructure, road infrastructure. Lots going on, right, which needs to be paid for. When you look at how the state government generates a lot of its income, payroll tax being one of them from businesses, but major one, stamp duty. So they benefit from the buying and selling of real estate.
The rivers of gold, yes.
Absolutely critical.
Yep.
Absolutely critical. So the logical idea for me would be that the government and regulatory components of it would make the buying and selling of real estate as easy and simple and transactional, but also transparent as possible. Stamp duty, everyone hates it. You don't get a lot of benefit out of it. It always pains me when I'm spending it when I'm buying a property. What's your view towards stamp duty? I know there's been some tinkering with it recently and a lot of rhetoric around it. Any views you've got on this?
Yeah, so let me correct you. When you said you don't get a lot out of it, you get nothing out of it.
Yeah, okay.
So let's clarify that.
Well, I don't mind. To be fair, I don't mind paying I don't mind paying tax because I'm getting the benefits in greater infrastructure, and it's a cool city, right? We need a cool state. We've got to spend the money, right? It's got to come from somewhere.
So the IPART report a few years ago came out and described that stamp duty and, for that matter, land tax were a very inefficient tax and were inequitable. And I think that's right. But let me give you an example why it's a bad tax. Tax should not be a consequence of a transaction. So both you and I got up this morning and we decided to come to work. We could have stayed at home, but we decided to come to work, and we did. And we knew when we came to work today that we would have to pay tax on our income. Didn't stop either of us. However, when you look at transacting property, you say to yourself, if I buy a property, or if I sell my property here and buy another one, I am going to have to pay a great chunk of money in tax to do it. So my option is, let's not do it. Let's go and engage with some of these folks that are, which I think their business will boom, the knock down and rebuild people. So if I'm sitting here with a chunk of money that I'd have to give to government, then the argument that these people are putting forward, and it's a pretty good argument, let's knock the house down and use the stamp duty money, and let's reshape the existing house. Now that's terrible. Tax should never be a consideration of a transaction. Tax should be a consequence of a transaction, and that's what makes stamp duty so bad. Let's examine it a little bit further, though. The last time that stamp duty, the rates now of tax were amended, was in 1986. Okay, now if we look at the 1986 motivators for where those brackets were to be drawn, in 1986, the median house price in Sydney was $93,576, and the median unit price was $86,109. Okay? That was where the tax brackets were set for those numbers. And the then Treasurer, when he was in his second reading speech, said to Parliament, don't worry about the higher brackets, don't worry about them. They'll only kick in with those really, really expensive properties of $320,000 and the like. Now, by sitting still and doing absolutely nothing, successive governments have allowed those affordable properties to move up and up and up into all being overtaxed now. And it's ridiculous. Now, when the Treasurer came out last year and said, I'm going to peg the brackets to CPI, that's wonderful. Unfortunately, he's going to start that this year, in July of this year, as I understand it. So it'll be 33 years out of date. If you're going to do that, if that's what you want to do, and you should do it, let's go back and do it from when it should have been done.
Just retrofit it.
Yeah, exactly, 1986. And here's one further fun fact in all of this. If you drop the rate of tax, you will increase your transactions. And if you increase your transactions, government will make more money. And there's ample data to do that. So
no doubt it's an argument you've put to government and the regulatory bodies within government. What do they think of you spelling it out this way? What's their response?
Well, you can see the response in the action. So the closest we've got is to have this CPI increase, which is nothing more than smoke and mirrors. You know, when you actually look at it, I think people were going to save $1,000 or something like that. So there would have been more time and money spent on the congratulations than on the substance of it all.
Okay.
You know, I am a realist. I accept that, as you do, that you have to pay tax. So people have said to me, well, if we don't tax it this way, we can tax property this way. I said, well, hang on. Is property your go-to solution for everything? Is it the only thing you're going to tax as a state government? You know, there's other opportunities, I think, to look at taxation rather than taxing the very thing that puts a roof over our head, one of life's necessities.
Yeah, it's a challenge, but you know, you've had the period of time you've been in your role as CEO and going back to the mid to late 80s when this was last looked at. You've had a lot of governments and a lot of different premiers, a lot of different regulators during that period of time, hasn't changed too much. So obviously someone's happy to receive the money as it's coming in right now. And what would happen though if the New South Wales government wasn't getting these rivers of gold coming through? You know, I don't know how you're going to change it. This is the problem. I'd like to see some change personally because I hate paying it, but
well, as I said to you, I think there's a sweet spot here where you drop the rate of tax. And by doing that, you increase the number of transactions. And by doing that, if your volume increases, albeit at a lower tax rate, you'll make more money. So I'll give you an example. If I said to you that we were going to increase a tax on something like an item, we're going to bring in another tax on the same item. Intuitively, you'd say, well, that's great. We're going to make more money. Now, what happened? It'll be about 8 or 9 years ago now, maybe more, when we brought in the vendor duty. Now, intuitively, we're saying, let's bring in another tax. We'll tax the purchaser with the stamp duty, and we'll tax the vendor with the vendor duty. So we're going to make a lot more money.
Double dip.
Exactly. Now, in the year that they did that, they lost 650 million, I think. And in the year that they got rid of it, they made nearly $1 billion more. It was 900, they missed it, but it was nearly $1 billion more. So it reduced the tax, got rid of a tax, and made more money.
More transactions.
Correct.
And Sydney, New South Wales, Sydney in particular, is a growing city. We're talking about in 20, 30 years' time, there's going to be a lot more people here. So there's going to be a lot more transactions. I would like to think that the framework's getting created right now to make sure that the New South Wales economy can be stimulated as much as possible by supporting all of the different people involved in property, so developers in particular. Developers are a huge employer of tradies. There's a lot of work going on there. And then as this money flows through, obviously infrastructure work. So it is critical, absolutely critical that this balance is created correctly. But this conversation with you, I sort of sit there and think, it doesn't sound like it's going too well. Is that a bit of a misconception, or is that...
No, it's not. And the problem is, and it sounds like I'm back on my soapbox about fair trading, but the problem is that property is such a sexy industry that everybody wants a piece of it. So when you look at the property industry, we've got bits and pieces of it thrown all the way around various government departments who have no interest in trying to give up their piece. Now, our suggestion is let's pull the whole thing under one roof. Let's look at this holistically and be able to put strategies in place that go beyond just the silo within which that particular department lives. And that's where the solutions will come from. Not having planning in one area and then the regulatory environment where we are in another area, and then the Office of State Revenue in another area, and it goes round and round. There's people everywhere. And none of them are talking to each other, and that is it's grossly inefficient. As I said earlier, going back some time ago, we had a housing minister. Now, what motivation there was to get rid of that portfolio, I don't know, but I think we've demonstrated very clearly that it was a very, very poor decision.
All right, well, watch this space and keep us informed about what you guys are doing. You're quite visible in the media. You're always getting a run in somewhere or other, trying to ruffle a few feathers, which is the job of someone like yourself to help shape policy legislation moving forward. So back to the property investor, and they've listened to this and gone, oh, okay, I feel a little bit more informed about this right now. I didn't really think about it that way. And I'm talking about myself. Yes, I have a role in this. I am a key contributor to government coffers through the taxes you pay, whether it's land tax or it's stamp duty. What can I do about it? Can I do anything about it?
Yeah. I mean, be loud is the point. I mean, it's the power of one. It is wrong, and as an investor, if you want change, you've got to go and do it yourself. You've got to be heard. Write to your local member. Right about now, they're going to be more attuned to your concerns than they are in the past. Come onto our website. We've got a petition going on as well, so we're able to capture comments and people voting for it. But, sitting back and being silent is an invitation for people to treat you badly. I'd like to pick up on one thing you said, which you may find of interest. When you buy a new property, you pay over 40% of that cost is in taxes and charges. Over 40%. Okay, so $1 million property, I'll pick that number because I can do the numbers, our maths in my head. You're paying over $400,000 for that new property off in taxes and charges.
That goes to the government.
Yeah, it goes to all levels of government because nobody misses property. It's the only asset that gets nailed by all levels of government.
Therein lies a challenge, because if we, as a growing state, need to be creating shelter for a growing population, a lot of fees and charges wrapped up in that. That might be inhibitive to the speed in which we can continue to advance as a city and as a state. But that's probably another podcast, I think. No, really enjoyed it, Tim. And just to reiterate my position on this, I just really wanted to bring you in so you can inform and educate and maybe give some insights into our listeners on what you guys do and how you do it, and maybe some of the context or greater visibility into probably a world they might not be familiar with. I'm just here to really give you a bit of a platform to have a chat about it. So I'm not going to have my personal opinion either way. To that end, though, I would say that Smart Property Investment, we're pro-property, we're pro-property industry, we are pro-advice. So we feel as though that Australian consumers get a much better outcome if we have a more vibrant, informed and educated property services industry. So these are the people helping people secure their property, and whether that's buying or selling real estate from a real estate side of things through to accountants, insuring people's finance are in place, or mortgage brokers or buyer's agents. So that's where we come from. So our sort of worlds align in many ways.
That's right. And advice, I think, is at the centre of it. And I was saying earlier, and I suppose having a whinge, that we're spending too much of our time ticking boxes rather than looking at mechanisms to provide unique services, unique advice to the transaction. And that's where we should be right there. And we talked about technology disruptions. Yeah, that's there. But if we embrace that, we can bring a whole different service and move with the times. And to be able to say to people, this is what this property can deliver you. This is how we can reshape the offer, et cetera, et cetera, et cetera. And actually bring that experience, that training to the transaction. And that's where it's got to be. Then you grab hold of the technology and ask yourself, what other services can I facilitate, can I deliver within this workflow? To be able to push a couple of buttons and provide far more services and then become far more relevant to the transaction. And I think that's the key word going forward, the key words. One is advice and relevance, and that's where we have to be. Absolutely critical. And we've obviously had Real Estate Institute of the Australian national body. We've had them in the studio for a bit of a chat, and they're similar objectives, but at a federal level. But this is a shout out to the other states. We've had a really good view from Tim about his role and the association's role here in New South Wales. But other states, come on, have a chat with us. Tell us your pain points. There'll be a lot of commonality in the work that they do, but the markets are different, the governments are different, and some states are a little bit more see the world differently to New South Wales. And I know you get together with your counterparts and chat about these things. So I'm happy to have those conversations. Get in touch, editor at smartpropertyinvestment.com.au. If we've raised any points, any ideas today in this podcast that might be new to you or you're not very familiar with, go and check out smartpropertyinvestment.com.au. We write about it a lot, but if any questions at all, editor at smartpropertyinvestment.com.au. If we can't answer them, I'll flick them over to Tim, and I'm sure his people will be happy to help you out. To reiterate what Tim said, you do have a voice as a property investor. Go through those channels, speak to your local members to help or have you play your part, participate in shaping the way in which property is transacted in Australia moving forward. Tim McKibbin, thanks so much for your time. I really enjoyed it. Thank you very much. CEO of the Real Estate Institute of New South Wales. We'll be back again next time. Remember, smartpropertyinvestment.com.au, or you go to social media if you're that way inclined. Search Smart Property HQ. You'll keep abreast with what's going on in property and property markets right across Australia. Click the subscribe button wherever you're listening to this right now, and we'll be back again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.